It's Friday. It's Friday. Happy Friday to pre-market prep. Hope everyone is having a good start to their day. We're going to have a great pre-market prep show. We'll get you a little quick little Middle East update. Hot take incoming. Trump maybe compromising a little bit. Whoa, who just said that? We'll talk about that a little bit. Meta shares getting absolutely whacked yesterday, down 8%. Snap shares right along with that, down, I think, 10 or 11%. We're going to get into why we think these stocks were down yesterday. IGV cannot catch a bid. Triple D and I were just looking at Microsoft. When was the last time Microsoft has been higher after the stock has already been killed? Unity Software with some pretty darn good guidance, raising guidance. Veritone out with what I'm calling a name drop moment with Oracle. We will preview our next week calendar. It is a little bit light, but we will preview it anyways. We'll get into a handful or maybe even two of ratings and sell side related. We do have a special guest switch up here today, folks, at 8:35. Brian Shannon will be joining us on quick notice. We appreciate that from Brian. Let's get into it here this morning on this Friday on Pre-Market Prep, folks.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Good morning, traders and investors. Let's get into it here. SPY trading down, futures trading down about 0.7%. Let's take a look at crude oil. Crude oil trading up 2.5% here. Silver, start off with the silver. Big mover yesterday. Silver trading down about 0.2%, while we have GLD gold trading up about 1%. Let's do one more here before we get the triple D trader to the stage. Bitcoin this morning, BTC futures remaining, unfortunately for bulls, under the 68,000 level, lost a little bit of territory this morning, down about 3% around the 66,000 level. These charts, folks, brought to you by TradeStation. Michael Fian, thanks for putting the banner up there. Born to trade, chart, analyze, customize, all in one platform. Thanks to TradeStation for sponsoring charts for pre-market prep. Let's bring to stage triple D trader Dennis. How's your morning going?
It's going well.
Woo!
Going like most of these mornings, we get these overnight sell-offs again. So exact opposite to what we saw all last year. It seemed like, market would be kind of stale, maybe goes down a little bit during the day, and then they ramp it overnight. And it's like just like clockwork, ramp it overnight. Well, it's the opposite here now. It seems like they sell it off overnight. And why is that? We know why that is. We've talked about this war trade forever here. So at just after 4 o'clock, you saw a violent spike. Yes, spike in the S&Ps. I know we're down here now, but a spike. As per, nice truth here. This is from Donald Trump at 4:11. As per Iranian government request, please let this statement serve to represent that I am pausing the period of energy plant destruction by 10 days to Monday, April the 6th at 8 p.m. Eastern. Talks are ongoing, and despite erroneous statements to the contrary by the fake news media and others, they are going very well. Thank you for your attention to this matter, Mr. President Donald Trump. Okay, S&Ps, if we bring back, let's go back to the chart from last night here so you can see the action. S&P futures spike 70 handles on this tweet last night. 70 handles. Yes, we hit up on SPY. 652, I believe 85 was the high, but I don't have it written down. But over $652. Friendster's going back, getting in the charts here right now.
Here
but
they are.
We started leaking right away.
Here. We're looking
so you can
right
see
here.
it. You see that huge line way up there? That line, like actually it shows 656. I didn't see that. So I'm not sure if it did that, but no, that's the bar. 652. You see that little line? You see it, Brentster. Look at 1600. Put your scroll on it and point right to it for us here so we can show you right where we're talking about.
This thing, look at that. There. Look at that.
That's the spike. That's the spike on the truth. We've been talking about getting a spike on another truth. Donald Trump does not like the stock market going down, and he puts out truths to make it go higher. It absolutely did. but the market is getting a little bit exhausted with these, headlines coming from Trump because he's done it, 1, 2, 3, 4, 5, 6, 7, 8 times. And every time it's been sold. Fool me once, shame on you. Fool me twice, shame on me. Fool me 7 times, I should be ashamed that I'm chasing these moves now. That's where the market is. And that is what has occurred is we have sold back off. We started leaking last night. We were live in the STN room saying I would not chase this, and I wouldn't be surprised if it continues to leak. It has indeed. Now we've seen some slight escalation from the war trade overnight because we have another ship that has been blown up in the Strait of Hormuz. The market does not like that at all either. So Trump saying the talks are going well, yet they're still blowing up ships in the Strait of Hormuz. At least, there's, a ship on fire in the Strait of Hormuz. We're assuming that's happened. Oil has spiked up here once again. The inverse correlation remains. USO goes up, SPY goes down. So now we're making new lows. So is this the best buying opportunity ever? Because eventually we're going to get a deal. Eventually the war, there's a lot of things happening here. And that's why we titled this show, Is Something Else Happening? So is all this sell-off just the war? Is all this sell-off just, other things happening? That's what we're going to try to dig down in. So I want to go to Meta because this was the story from yesterday. Meta got absolutely hammered, and I mean hammered, going from 600, now it's down to $541 in a day. I own some Meta in my long-term portfolio. Wish I didn't. Looking here, the headline yesterday was this lawsuit. Everybody talking about this lawsuit, this massive lawsuit that's basically going to, be, the big tobacco moment for Meta.
Sarcasm, I think, when you said massive, because it was $8 million is a number that we heard, correct?
It was 6 million.
It was
6 million with M. So somebody was awarded or in the lawsuit $6 million in M. Google, YouTube's going to pay part of it. Meta's going to pay part of it. And they're like, holy crap, this could be really bad because it could lead to thousands of more lawsuits. Meaning, is this like Meta's big tobacco moment? And if you do the math, so
the suit was for addiction to social media, correct? Did I?
Yes.
I might have. Okay.
Yeah. Somebody is addicted to social media and they got awarded. So everybody's addicted to social media. So could they get thousands and thousands of lawsuits coming at them here now? I mean, they're going to appeal. There's no way they're just going to go pay this. I don't think they're just going to go pay this. Like, why would you go it's your own fault if you're addicted to social media. They're putting a product out there. I got addicted to it. And all of a sudden, we have to have a warning label on our Facebook. It's kind of like the hot coffee thing, with McDonald's, which you were saying.
That's what I said.
Yes, hot coffee's hot. I spilled on myself. It's worth millions of dollars. So the lawsuit in all is kind of ridiculous, but the fear out here is real. And this is what is the bigger thing, is that this market just is selling first and asking questions later. So does that mean Meta is the best buy ever? This is a ridiculous lawsuit, probably could get overturned. There's probably not tens of thousands of lawsuits coming at them now, and we're not, am I going to go sue Meta, because, I'm addicted to, scrolling through, or sue Twitter? I highly doubt that any of these lawsuits are going to stand. With that being said, normal markets, you'd be like, okay, this is a buying opportunity for Meta. I'm going to say it's not a buying opportunity for Meta, and I want to tell you why. Because
wait,
I
Dennis,
believe.
Let me give a little perspective here. So Meta has in their last quarterly report, they reported their sales, their cash equivalents, and marketable securities for the end of 2025, $82 billion. Let's just say they get 1,000 of these suits at $6 million for a total spent to get these suits paid out $6 billion. That is crazily a drop in the bucket of just their cash. So
and maybe they get tens of thousands.
I don't think there's thousands.
I don't think they're going to get tens of thousands. We're all going to go. We're all going to go sue. We're all going to be millionaires on the back of Zuck because we're all addicted to social media. Somebody just said they're addicted to PMP. We're going to sue you guys too.
Yes.
Addicted to PMP in the morning. Where does this stop? This is a ridiculous lawsuit. So, like I said, if we were in normalized markets in normal times, I would say I would buy the dip on Meta. But I'm not going to say that today because I very much see Meta's been going down for a while here now. Meta has been going down with, the disruptions that are happening with AI. We've been leaking. We were at near 52-week lows on Meta when this happened. Obviously, it went down. on the lawsuit. Everybody's running with this headline because the media wants lawsuits here. They want to know, it's sexy. It's a cool story. Meta's big tobacco moment. It's a really cool story. But my fear for Meta is not about future lawsuits. My fear for Meta, and why I'm considering selling the stock at a loss, is about AI disruption. And I think there's something bigger happening here. I think AI disruption is for real for all the social media platforms. Why do I think that? Because we've been playing around with OpenClaw. Josh doing a great job in the background. We also got Brian working in the background here, building some tools, and we're amazed at how quickly we can build stuff with OpenClaw and no programming experience. I believe, Brian said this to us in the STN room last night, that we are entering the creator economy. Great, this is what Brian said, and I completely agree with this, where we're going to have thousands, if not hundreds of thousands of creators. Now, we've always had creators of content. We've had thousands of creators of content, maybe hundreds of thousands of creators of content. But I'm not talking about creation of content. I'm talking about creation of software and tools where you have everybody all of a sudden creating cool stuff. And it's a lot easier than you think. Because we're working with this. We've been working with it Josh been working with it for a week, and we're already gone a long ways. So I can't believe how, one, cheap it's going to be to build software in the future, but two, how quickly it builds. I'm just jaw-dropped and amazed at how quickly it's building. And we're working with it and seeing it, and I'm like, I can't believe this. Like, this is game changer for the entire world. So do you think for a second, we're building some stock market tools, but do you think for a second there isn't people out there thinking, I could build a chat room, a really cool niche chat room. I could build, let's take it a step further. Maybe I could build a social network. Maybe I could have like a little niche social network. Imagine, right now we have how many major social networks? We have like Twitter, Instagram, TikTok, you can go, Snapchat's there.
There's
WhatsApp.
like 10. There's like 10, let's say.
Big ones. And then there's like little ones too. There's probably hundreds of little ones. Now imagine an economy where everybody all of a sudden can program and create their own social network to what they want to do, to where it's like niche, like where, my wife likes art. So we're going to have a social network based just on art. We're going to have everybody in there that can actually use tools in there and create art for everyone in the social network. That's just one example. I truly believe there are going to be hundreds, if not thousands, of new social networks popping up here in the next 6 months.
Yeah.
This will create, and is everybody going to leave Instagram to go to this crappy social network? Probably not. But what if they find one that's kind of cool? What if they find one, this is actually pretty good. I like this better. There's more of my people over here, the people that I can, get along with, people that, see my political views. There could be all of this happening here behind the scenes. All of a sudden, you don't have a choice of like, I'm going Instagram, TikTok, Twitter. You have a choice of thousands of different social networks created by everyone. I mean, what this would do is disperse eyeballs everywhere. So what could happen is we don't have everybody, just a billion people on Instagram anymore. Those eyeballs are now dispersing and going everywhere. And those advertising dollars go everywhere. They're not just captured by the Mag 7. They're not just captured by Meta. They're not just captured by the big companies here. So if that occurs, Meta is going to have a hard time keeping everyone on their social platforms. It's not even about getting more people. Forget about the growth. It's going to be, how are we going to keep those people on our social platforms when there's so many options available to them? So here is where there is a major issue for all of your social networks. And this is why something bigger is happening here than just a $6 million lawsuit that we're all addicted to social media. I mean, Reddit got hit on this yesterday. Snapchat got hit on this yesterday. They're going to blame the lawsuit, and it's true. But look at what Reddit has been doing. Folks, the stock market is telling you the lawsuit came up yesterday. Reddit is not down from 260 to 140 because, in the last 2.5 months because they were worried about this lawsuit. Reddit has been going down with software. IGV. Reddit has been going down because, oh my gosh, there could be more Reddits created quickly. And maybe cooler ones, maybe different ones, because it's not just little guys that know nothing about. There's companies that are going to create this stuff, like bigger companies that are going to come out with new social networks. So maybe, Dennis Dick doesn't know how to create a social network, but do you think a few engineers at Microsoft do? Do you think a few engineers, at some of these other major companies do? Do you think like your hundreds of thousands of programmers that are out there that are working for some of these companies that actually might lose their job because, we don't need you here? They aren't going to go out and find new revenue streams with their programming experience and creating new things. There's going to be so much new stuff created. Again, I'm going to say Brian's comment, the creator economy where it disperses eyeballs everywhere. That's really bad for the mag. That's really bad for companies like Meta.
I think Discord is an interesting example here, because what Discord did is it allowed those niche communities to happen. But here's the difference, at least from my perspective with Discord, is Discord didn't allow people to build the software. Discord is this platform where you can host a community, a bunch of various kinds of communities. But when I use Discord, there's things that I don't like about Discord, and I wish I could change. With agents, I can not only build this community, but build the software exactly the way that I want. Oh, I want the little chat thing to be just a little different.
Sure.
Well, I can do that.
Yeah.
And I think as a society, we are getting like more and more niche. We're getting more and more narrowed. We love our little communities and we're going to focus on them. And if we can build a platform that not only hosts our community, but allows us to do all the tools that we want in that community, unless Meta, here's what I will say, unless Meta finds a way to build like a dashboard for people to build all this software, which I think is just an agent anyway, then I think you're very on point here, Dennis. And over the years of knowing you and working with you, if I think you're good at, you're good at a lot of things, but one thing that you're really good is behind the scenes. Like you have such a good sense of what's going on behind the scenes. And if you're saying you feel like there's something else going on here with, the social media, I'm on board with this too. I think this is a great call.
I think it's going to disrupt everything eventually, unfortunately. I know we keep coming back to this conversation. It's nauseating and people get mad at me. I get hate texts saying, what are you talking about? I'm going to lose my job. I'm a lawyer, don't talk like this, like that. I mean, what I'm saying right now is if you're not embracing AI and using the tools to create stuff and become, what you need to do as an employee right now is at least subscribe. Don't do the free versions. Go out and get a subscription to one of them, whether it's ChatGPT, whether it's Anthropic, whether, or whatever one comes out tomorrow, because that's what's going to happen. You've got to be able to embrace these tools and make yourself more efficient. Because if you're saying, I don't need these tools in my business, your business is going to be in trouble, because these tools are going to be, the efficiency creators. Like we're going to go into an efficiency economy too, where everything is just exponentially more efficient, So there is going to be new AI is undoubtedly going to create new jobs. You want one of those jobs, because I think the quantity of AI jobs that they create is going to be a lot less than it destroys. But there is going to be better jobs, cooler jobs. So get out there, embrace these technologies, use them. As traders, you guys should all be using these tools. If you're not using them, it's crazy, because these tools are available at your fingertips. They're some of the best tools out there. I use Gemini, just using it every day. My wife's got both Anthropic and OpenAI, using both of them in her stuff. I mean, running everything through there, even to sending emails, but it's going to keep going. Like, it's not just, we're like I said yesterday, we're in the, basically for AI, I said, we're in the second or third inning. I'm taking all that back. I don't think we're in the second or the third inning for AI at all. I think we are at the first pitch of the first inning. The first pitch of the first inning. The market is just realizing, though, that something bigger is happening here. So Microsoft, look at the software names. I mean, this was the easy disruption tools, but it goes down every day. Every day it goes down.
I just
People
counted
are saying,
Triple D.
this is the best buy of all time. Maybe it is. Maybe Microsoft will figure it out. If this company can find its way, it's probably Microsoft. But competition could be coming from not just one or two new competitors, from thousands of new competitors, because everybody can build now. This is the problem. The creator economy makes everybody a builder not of homes, a builder of software, programs, intellectual property, a builder of all these things. This is what is really happening here, folks. There is something else going on. So we can blame the war for all your stocks going down, but in reality, there's something bigger happening here.
I just counted, and it's 12 out of 13 days that Microsoft
has been down
has
after
gone
already
lower, yeah.
being down substantially. It's one of the biggest drawdowns for Microsoft. Somebody says the biggest drawdown in 20 years. That's probably correct. I think it's down like 33 or 34% from the highs now. This is one of the biggest companies in the world, and one of them, been one of the best companies in the world. It's been unbelievable. Something bigger is happening here. Now, again, nobody has, maybe efficiencies are going to bring stocks back to all-time highs. That's what Citrini said. I think there's an argument here. I think we're going to get another truth. We're going to deal eventually. We'll pop up on that. But I also think that, man, if you start getting like in social networks a dispersion of eyeballs where they're not all in one place, because think everybody's on TikTok, everybody's on Instagram, everybody's on Twitter. I mean, imagine that they're not all at those places, but they're at the places they want to be. Like a room full of just stock traders that talk politics and the kind of politics you want, and you can find them. But not even a room. They have like toys and tools and stuff within, and stuff to do in there. Like, a playground. Like a sort of playground.
There it is, Triple D.
Social media. Like a playground, like independent little playgrounds.
And communities
you want to play on.
And community, like, yes, our communities are becoming like separated a little bit, but can a platform that we design and we make choices on put all of those conversations in one little area, and maybe the communities are talking to each other? I don't know. That seems totally possible. I think that's.
Yeah, go ahead.
I think you go.
Like the megacorps. Think about like how everything has, like we talk about the Mag 7, and what happens, Meta, they go out there, they see Instagram, that's really cool, let's go buy that. Let's go, we'll be Microsoft, that's really cool, let's go buy that. So they're just not going to come and just buy up, whatever cool companies are created. Maybe, but I think they will get overwhelmed. I think there's going to be so many thousands of new cool ideas out there that they actually won't be able to buy them all. So in essence, what AI is kind of creating to a certain extent is, maybe this is just a thought. I don't have a crystal ball. I'm not, again, I'm not, going into the future here. We're just, it's all guessing. Stock market, all this is just guessing. But, if AI is actually going to create all these creators, maybe this is like the beginning of like the megacorps actually breaking down, where you don't have 7 or 8 or 10 companies controlling everything anymore. And that, my friends, is very scary. If you're all Mag 7, that's scary. I mean, could there be new competitors? Sorry, still dying. AI will fix my cold eventually, hopefully, and I never get that again. But could, there be new competitors for NVIDIA? Could there be new competitors for, like hardware stocks? We saw a little hardware tantrum here a couple days ago with the release of, I never remember the name, from Google.
Oh,
TurboQuant. So, and somebody's saying this was out a long time ago. Well, I mean, Micron is going down every day here now too. SanDisk going down every day because they're like, holy crap, maybe hardware gets disrupted too. Where do the disruptions stop? When do we stop talking about disruptions? That's the fun part. We don't. AI is the disruptor of all disruptors.
I think that there is a little bit of a misconception too with AI in the way we're thinking about it now from the place that it came. AI from, 3-4 years ago was like all about like predictive analysis and like using AI to like, make models that you can benefit from. And I think there are still people that are kind of stuck thinking in that way. But I think it's expanding and going like into tools, like software and tools, and you can build your own tools. It's not about getting all this data and like processing this data. It's using the bots to help you, get information faster, not just make decisions about trading, but get information faster so that you're just a smarter, more informed person in general.
Just so much potential disruption everywhere. If you can think it, you can build it. That's where it is now. I mean, and that's, what people don't realize. They think, oh yeah, this is just, something I just ask it questions and it gives me answer. It's enhanced search.
Right.
It is so much
more
enhanced
already. Yeah.
It's coding, it's doing everything for you. Just go try some of the stuff out. And the tools are only going to get better. So we've got to continue to, as traders, always be ready for, what's coming. You got to look ahead. What's coming? What's coming is this huge tsunami of AI creators. A tsunami of AI creators is coming, and it's going to disrupt everything. So the argument here is like maybe some of this money that's all in the public sector can go to the private sector. Maybe we have the private sector like private little companies picking up and stealing money from the Metas and the Microsofts. A dispersion of eyeballs would be absolutely devastating for Meta. Meta doesn't want to hear about dispersion of eyeballs. I think this can happen. I think there's something bigger happening here. And I don't know what you want. I don't know what's safe here. I really don't. It's very tricky. I've been talking hardware and energy, but now we're seeing hardware get disrupted. Does energy eventually get disrupted? We know quantum can do stuff a lot. If somebody starts running with quantum, all of a sudden that can get disrupted too. So where is your money safe? I don't know, but I'll tell you, on rallies like the Trump rally yesterday and the Trump rally the day before, I'm raising cash.
You want to talk about a rally this morning? See if this segue works. Unity Software shares up 15% here. They had some guidance, preliminary results last night. They raised their Q1 sales guidance decent little bit, nothing crazy, but a decent little bit. Their prior guidance was 480 to 490. They've upped it to 505 to 508 million. Analysts were under 500 million. And we have, again, here, shares trading up about 15% this morning on some pretty strong guidance. They also said that they are going to be reorganizing a few units. So if you ask me, just reading the press release real quickly, it looked like at least Unity was, trying to cut back on some costs and trying to maybe efficientize their operations a little more.
Money Mitch might have said it best last night on our 7:30 Money Mitch show. And somebody's asking about Unity with the big pop, and he's like, this is just not the sector you want to invest in.
Yeah.
And I mean, I think in normalized markets, this is great. Unity's doing good, but we've seen ServiceNow kill it, CRM kill it, and talk and raise guidance and do buybacks here. And the stocks eventually just leak it away again.
Yeah.
I think, unfortunately, software is the most easily disrupted thing out here. And I think again, when you're investing here, you can't even think about the competition that's currently there. You got to think about the competition that's coming for all these companies from so many different angles. And I just can't get on board with investing in anything software right now. So I think when you get these 10, 15, 20% reps, and it's very oversold. Could the stock go back to 30? Well, it did. It went from 22 to 28, but all rallies being sold. And again, Jay Rice, you say it all the time in the chat. And I say it too. Stocks that are in, Brian Chan's going to come on here in 5 minutes. I'm sure he's going to agree. Stocks are in these really huge downtrends. You sell rips on these things. And unfortunately for Unity, this one is in a bad downtrend here right now. What turns it around? I don't know, man. I don't know what's going to turn software names
Get
around.
out of software.
Maybe they do. Maybe we're wrong. Maybe AI fails. Maybe government regulates not AI enough that all these other companies will be okay. But you're reaching here to think that AI doesn't disrupt software. And Unity software, anything that has software in its name is ripe for disruption.
I think I have another example for you here, Dennis. Veritone, VERI. Arguably, this is a company that calls itself an AI computing solutions and services software company. So maybe they're in the right corner of software. I don't know. Company had a little bit of news last night. They had some mixed guidance. They gave quarterly guidance, they gave 2025 guidance, and they gave 2026 guidance. The Q1 and the 2025 guidance were crappy. They were worse than expected. The 2026 guidance was fine, but they also, in a related press release a few minutes later, announced a, quote, strategic agreement with Oracle. I think the stock started moving higher on that. You can see the move there. Sold off pretty quickly. Is it because it's in the software space? Or I think it is a little bit of that. But I give warnings about this all the time, folks. And I think that this strategic agreement with Oracle was a bit of a name drop kind of fluffy moment. If you read into the press release, this is kind of your education moment. Sometimes you just got to take a beat and just go read the press release. Because if you read the press release, the Veritone, very first line of the press release says, Veritone today announced it signed a multi-year agreement with Oracle Oracle to migrate Veritone AI solutions to Oracle Cloud infrastructure. So Veritone is taking, yes, it's multi-year, yes, whatever. It's called a contract that they signed. Veritone signed a contract with Oracle to use Oracle's cloud infrastructure service. They're now going to be hosting their Veritone AI solutions product on Oracle cloud infrastructure. But they can go and call this a partnership. I don't believe this is a partnership effectively in the traditional sense. I believe that this is a bit of a fluffy name drop moment here for Veritone.
I mean, again, you know, stock is in like a death trend, call it, not even a downtrend, a death trend here. And the stock has just been straight down. When you get these spikes on fluffy press releases, like Brentster says, they're selling opportunities. Stock spikes up to $3.30 last night. Can't hold it even for a day. It's back down to $2.39. I mean, the story here is over. So Veritone's story, unfortunately, is over. We also missed this morning because we were talking about disruption. We didn't get to it here. Cybersecurity stocks are all killed again. Cybersecurity stocks are all killed again. This is not on war. This is not on, you know, just a weak market. This is on AI disruption. Claude Mythos, I don't know how to say it. Mythos, I guess, rolled out here overnight. Mythos, a large compute intensive model. Just trying to see. Anyways, it looks like, you know, this is in ways to obviously Claude's coming out with protecting yourself. So cybersecurity, so Fortinet, Palo Alto, Okta, CrowdStrike, all happening again. I mean, if you were saying this is all just, you know, nonsense, I'm going to buy these stocks, you are getting continuously punished and losing a lot of money. That is what is happening to you. I was on this show a month ago, when most of these stocks were still trading up near their highs and saying, I think cybersecurity eventually gets disrupted. Good call, Dennis, because you know what? That is exactly what has occurred. So we can say it, Dennis doesn't know what he's talking about, but you know what? The market thinks I'm right. The market thinks I'm right.
You want to do a little preview for next week before we get Brian here, Dennis?
Let's do the earnings preview. Sure.
Yeah, Michael Feehan does have a nice little calendar for us. Let me just pull it up real quick.
We'll tweet this out after.
Yes, we will. I'm going to share it here in just one sec. Thank you to Michael Feehan for building us beautiful calendars like this one that I'm going to put on screen right here, right now. Yes, it is a light week next week. Keep in mind the calendar is a bit sparse, but we are out of the earnings season. We were out of earnings season kind of like last week even. So just reviewing here real quick, we do have Resolve AI on Monday. We have Progress Software, PRGS on Monday afternoon. I think kind of, you know, the highlight here for the week is going to be Nike on Tuesday afternoon. Some econ data here, a couple other company events shared, including an MP Materials Deutsche Bank virtual investor event on Wednesday at 12 p.m. And just a nice little public service announcement here, folks. The stock market is closed on next Friday, one Friday from now, because of the Good Friday holiday ahead of Easter. Any highlights on your radar?
I love
next
how
week,
Michael puts together, and we add the company events on the calendar here, because these move price. These things you need to know. I mean, even last week's we had which one was on there, and it had a huge move. Generac was on there, and it had a huge move down, a huge move up. You know, these are catalysts. You know, on this network, on Stock Trader Network, on PreMarket Prep, we're catalyst traders. We love charts. You know, they allow us, you know, see overall trends. You know, we're gonna have Brian Shannon, one of the best chartists out there on the planet, coming on here 1 minute. But we also love catalysts, and this is all this is. This is a catalyst calendar. So we're out of earnings season. Nike's the highlight next week. You can see that, MKC, and then, you know, that MP Materials investor event. That's, you know, an event that you want to know about. If you're trading that stock, that could move stock price. You know, we got a few other smaller ones there we're reaching. It's a very light earnings calendar. Holiday trade, Good Friday, you know, coming. But, you know, everything is here. So great job, Michael. If you want this, we'll tweet this out as well.
Awesome. You want to go see what Brian's up to?
I do.
Here we go. Good morning, Brian Shannon. How you doing today? How you doing this week?
Hey, doing good. I've been actually pretty quiet in this market. I'm just tired of the headlines, and I think that's what most sane people are trying to do. Stick to, you know, just some day trades. I've had one good swing trade this week in Marvell.
Oh, nice.
I'm down to a quarter position there, but that's been my big winner, and it hasn't been that big.
But Brian, so you're all over this market because like I just think about you when I'm like trying to buy the dip on a stock like Meta and thinking, man, you know, Brian would be like smacking me in the back of the head. What are you doing, Dennis? You know, this stock's going straight down. It's downtrending so hard. Don't be a hero here. I mean, are you just sitting back like mostly in cash here right now, watching everybody else lose money? Is that what you're doing, or do you play them from the short side? Like what's like the Brian Shannon setup when you know the Bears are in control in a lot of stocks? Uh-oh, we lost Brian.
Oh.
He'll be back.
He'll be back. He might have clicked the leave studio button. I've definitely done that.
That's
before.
okay. He's going to come back
on that before.
I'll get right back in. So it was going to be a good question too.
Here we go. Okay, you're gonna have to do it again.
We're bringing him back in here. Okay, Brian, you're back.
Sorry about
like
that.
He left.
Oh, good.
I did. I thought I was hitting the share screen button, but I exited the studio instead.
Yeah.
So to answer your question, Dennis, I do some scalping and I do some trading on the short side. Yesterday actually was a nice one in the SMH. I did through the SOX, which was a great thing that they just did a reverse split on that SOX S. Just about, I guess 3 weeks ago now, they did one for 20 and made it a tradable product again because it was languishing down in that, $2 level. But this one, so the semis yesterday, they were looking pretty strong, but they rallied right into that 50-day. Let me clean up some of that stuff. Into that 50-day moving average, the year-to-date anchor, the anchor off of the high. And then they did a little short-term breakout. And I love those breakouts in a downtrend because from those failed moves come these fast moves lower. So that was, my best day trade yesterday. But I'm trying to be less active in this market, not jump after things. I mean, I was looking at, the breakouts. So many people are chasing breakouts and wondering what's happening. You got BWXT. This is just to show a few of these. I'm sure you're familiar, but Flextronics, beautiful breakout here. It went from 67 up to 73 and then back down to 63. GSAT was one that I had an eye on that was breaking out. Completely failed. Carbon, I saw a lot of people talking about this one a couple days ago. And that one broke out and then just completely shit the bed here. So, stock after stock after stock, we're seeing this, and it's a dangerous environment.
Well, that's it. It's a dangerous environment from, the bullish side, at least anyways. From the bearish side, it just seems like blindly selling the rip is like just working better than buy the dip normally does. I mean, all of these, breakouts are failing. Obviously, every Trump truth, it seems like here now, they can't hold the gains the last night even for a day here. I mean, just selling the rip blindly. I mean, but this is a market that's also dangerous to be short because you don't know when the next Trump truth is coming.
Well, that's exactly it. Yeah. I mean, I've had people say, well, just short it. It's so easy. I've been making money short. I'm like, okay, that's the true sign of a liar and a non-trader.
There's been some violent rallies. I've been caught on some of these violent rallies. I got caught last night on the violent rally because that comes out of the blue. And I'm like, oh boy, now I'm picked off. Now I'm trying to scramble. We come back in, but I mean,
completely gone. But in the moment,
truth bombs happening here. We'll call them truth bombs. They always go to the upside on these truth bombs. You see them truth something and it goes down. So it's not been that easy on the short side either.
Not at all. Not at all. I was just going to share this little screen here that is kind of what I've been looking at this week. And here, so I've got the S&P 500 futures, 30-minute time frame, the NASDAQ futures, let's just right here, 30-minute time frame, oil, and then gold. Blue is the week-to-date anchor. Orange was the first taco tweet. Green was the ceasefire tweet. And then black was taco 2. Which was last night that you're talking about. And, the market just isn't believing these things. We get, that was Monday, of course. And, as soon as we broke this level, it was actually, based on oil. Once oil broke back above this 93, 94 level, that's when the market said enough's enough.
Well, that's it. And the market doesn't know. But, let's just take it to this type of market because we've been in this type of market before. That's headline driven, where it's macros driving the bus. We've got geopolitical risk. with stuff going on. I mean, as a technician, Brian, I mean, how do you trade when there's headlines that'll just, you know, screw up your charts right away? I mean, like, bang, you know, a headline comes out, this is looking good, and then all of a sudden everything changes here. What do you do as a technician? Do you just, like, you know, back off, or do you, like, trade after the tweet? Like, how do you trade technically in a headline driven market?
Well, I do, you know, first of all, we're in a clear downtrend. That's the fact. That some of the declines has been greater than the sum of the rallies. So my focus is, if I'm going to buy a stock, it's really small. And actually, you know, on the short side, it's pretty small too. But what I've been doing is, you know, making sure that if I get up to go to the bathroom, I've got to stop in. I never do that. But you've got to be aware that you can get blindsided at any moment, even in these stocks that you know, these trades that you think are you know, day trades. If you're going to step away from it, you've got to have some kind of protection, because, like you said, these truth bombs that end up being not so truthful. These untruth bombs will, you know, blindside you so quickly.
So, Brian, just continuing on, you know, with the technicals, you know, and like looking at stocks and downtrends. Like, now, there are some stocks, like you found Marvell. So let's just talk about this, for instance, because it's bucking the trend. The stock wants to go higher. It feels like in a down tape. Every time the market rallies, this is one of the strongest stocks. Do you screen for this stuff? Like, how do you find a trade like Marvell? You just flipping through charts and looking, or do you have like a screener? Like, tell us about how you find, you know, the stocks that are actually performing well in a really crappy market.
Just flipping through stocks, Dennis. I've got a long list of names that I look at, and each day I break them down. So this is my list from last night. So these are the ones that are of more interest to me today. These are just things I might set an alert on. These are, you know, the stocks that, you know, I said were breakouts that failed. And these are ones that have been pretty, you know, holding pretty well with the year-to-date anchor. So I kind of develop little themes. Not necessarily, okay, software stocks or, you know, security stocks or that sort of thing. But I look at my list and I say, okay, well, that's what's the market is telling me right now. And I look at those and say, what are the themes that maybe are starting, you know, or working a little bit? And what are the themes that are losing ground? You know, SanDisk, Micron, Western Dig, and Seagate, they're losing ground. So, and then, you know, throughout the day when it's quiet, I'll go through like the, you know, the percentage gainers and that sort of thing. But I'm not like you guys. I just have never been a headline news catalyst driven trader. To me, they're too fast for me, truthfully. I've slowed down a little bit.
Well, I mean, everybody does. You know, you've been a great technical trader for so many years, and I've followed you, you know, for probably as long as Twitter has been around. I've followed you, and you always got, you know, great calls and stuff. So I love the way, you know, that approach to the markets here, where you can, you know, trade around the headlines and find your breakouts and find, you know, obviously the charts that you like here. I mean, that's awesome in itself. How do we get that list of the stocks that you're looking at? I love that you use the paper. I do this every day. I do the same exact thing. Mine are mostly catalyst driven trades, but same type of thing that me and Brian use the old pen and paper. We're old school.
Here's my trade journal too. So this is,
love it. I love that you write it, like writing it physically
every day.
Typing.
Yep.
I love that, because when you write something, it gets more in your head. Like, I'm writing it not only for like my notes. People are like, why, Dad? Like, my kid comes in here and sees this, and he's just like, Dad, what the heck are you doing? Like, you know, you could type something, you can do something.
Nice.
Yeah, I know we have that too. But, you know, here I am, old school. But when I write something down, I feel like it sticks in there more so than if I was to type it, because we can type so fast. I mean, Brentster types 100 words a minute. So, I mean, it's gone. But when I write it, it's slower, and I feel like it gets in there better.
Association.
Well, maybe that's what it is. But I love that you showed, you know, that you're physically writing stuff there too. So what else? Talk to us. So your next Marvell, what are you looking at something this morning that you think could be a nice setup here from the long side?
You know, not really. Here, I'll share the charts again. I mean,
Cool.
I'm kind of looking at, I'll show you some of the names on that list. And why they're of interest. So
everybody wants your list.
You know,
go subscribe to Brian's feed.
Lockheed has not held the 50-day moving average, but it came down to the year-to-date anchor. And now I think that if Lockheed can kind of flatten out the next day or two, maybe we see an inside day today, and Lockheed might be able to start moving higher here in the next, sometime next week. We've still got that declining 20-day moving average. So that's a little bit of concern. And, Northrop is kind of in the same area, but not quite as, it looks worse. So Lockheed, I've also looked at Raytheon. So when I go through my list, I see, that Raytheon failed its year-to-date anchor. So when I see that, and then I look at, Lockheed, I think, well, got to be careful because, Raytheon broke and so did General Dynamics. So we look at those and say, maybe this group is going to get going. And then we'll look at RDNT is on my list. And these are, this is clearly a downtrending stock. So these are names that I'm looking at on the short side, CPRI, that I'd love to see. What I sketched in here, this is what I sketched in for, subscribers last night, is I'd like to see a rally up a little bit. I don't want to short way down here in the hole after it's had this drop. But if it rallies up and then starts to roll over, I want to short the weakness after the strength. Caesars is holding up. I don't love the name, but MGM, I noticed, is also kind of in that same group, but they're not ready yet. And in DXCM, this one is in a nice downtrend. You look at the weekly chart, it's a broken name. The daily chart, it's, fighting with the anchor off this November low, which had been important. And it's just been choppy in here. So G, which is Genpack, also clearly in a downtrend looking to break down. IBM on my short list. NASDAQ on my short list. Love to see this one rally up and roll over a little bit. Pinterest also, love to see this one rally up and break down. So most of the names I have right now are, short. One that you mentioned a little bit before I came on that maybe is going to be a bigger theme, and I suck at this, is Generac. You look at this weekly chart, this goes back to 2001. Yeah. And if they didn't scare you out, they wore you out. And with, energy disruption, and if it continues that way, then people are going to, and the cost of electricity and the data centers, maybe, that means more people are going to be buying Generacs. It's not just in the hurricane states. So, those are the types of things that I look at and think about, but I have to wait until I see it on the shorter term timeframes before I get involved.
Brian, where is the best place that our audience can tune into some of your info and your calls? Should we do it on X? Should we do it on AlphaTrends?
AlphaTrends is all password protected, subscription stuff.
Okay.
X, I put a lot of good stuff out there. And honestly, the $10 a month X subscription is an amazing deal. I do, every single day, I do 2 market videos with some, updates like this. So that's really a great deal.
Awesome. Thank you. Yeah.
Brian, thanks so much for coming on short notice. I'm a huge fan. I know nobody does technicals better than you, and I think about you all the time when I'm going to buy that stock in that downtrend. So, Brian, thanks so much for all the education you provided for all the years, and we appreciate coming on short notice.
Thanks, guys. Have a good day,
Brian.
everyone.
You
Thanks,
too.
Brian.
Have a good weekend. Later. Cool.
Nicest guy, and he kills the charts, man. He's awesome.
Just keeps it real. Seems like he just has such a good sense of the chart, so much conviction and confidence.
Yeah, so good. And just like that longer term picture, I like when he looks out, even on Generac. I've never even looked
way far out.
I've never looked at that longer term chart with that rounding bottom like that. I'm in it for the story, me, catalyst driven trading. So I'm like, oh, there's an energy story here. So I like it. So, I'm in there. I've been talking hardware energy, and those are the kind of stocks that I'm buying. But, it's nice when you see that like longer term, turning. And I'm like, well, that's the energy side of it. And Generac's trying to go from a seasonal, trade where it's hurricane season, we buy Generac, to like maybe a data center play where, hey, this has actually got a business going, further. We got to go into software.
Dennis, I think they said that like 50% of sales on that investor day this week. I think they said like 50% of their sales in the next 5 years are going to be coming from data center usage, which is that progression that you went from, like a hurricane play to like sort of a data center play to maybe majority of their sales coming from data center.
We've got problems here in software. So CrowdStrike, and blame Anthropic here once again, Claude, but CrowdStrike's getting hammered, but it is spread. So it's not just, cybersecurity stocks now. IGV is having one of its worst days and actually it's getting perilously close to its February lows. So the nice 15 or 20% rally that we had from the lows on IGV back in the middle of February, went from 76 to 88, is now officially gone. It's given it back. And this is the story. This is the disruption story that I think continues here. You know, Brian can look at this and say stocks in downtrend, IGV's in a downtrend, why be a hero here? And that, you know, is awesome because, you know, it'll keep you out of stuff like this. The story here, though, is AI disruption. And we're seeing it every day. The new one, you know, what's going to get disrupted this weekend? There's 2 more days for stuff to get disrupted. So we can talk and worry about the war. The bigger issue for this market is AI disruption. The biggest issue for a lot of stocks in the IGV is not the war. This is not, IGV is not down because of the war. It's down because Claude's killing it. That's what's happening here. Across the board, CRM, ServiceNow, you know, all breaking down. Microsoft makes a new 52-week low every day. This is the story, folks. These are huge companies with huge market caps. You're seeing wealth destroyed at a very rapid pace here. And I'm not sure these stocks are going to come back anytime soon. I mean, the disruption, the risk here, like just as much as Brian was saying, there's headline risk, you know, on the short side, obviously, you know, with the Trump truth. There's headline risk on all these software names every day with what's the next thing that Claude's coming out with. What's the next thing, you know, that OpenAI or, you know, even Google could come out with here, because we saw Google hit the hardware stocks the other day. I mean, this is real, folks. This is happening, and this is not related to the war. So maybe we on a deal, we get a pop in these names. That would be a great selling opportunity on a lot of these names that are really beat up. But holy crap, if you're in a stock that has, even Robinhood, it's software. It's EKU.
What?
Robinhood is software. It's a brokerage software. So it's software as well. But there's something else in Robinhood, which I've argued, is that a lot of like those storied stocks from like the last year and a half have been crushed. You know, like, you know, Palantir is off, but there's a lot of other storied stocks that have really been crushed. So a lot of your Robinhood users are in a lot of these storied stocks. So I'm imagining that their assets under management are down a lot more than the 5% the S&P is down, or the 6% the S&P is down. I'd imagine there's a lot of accounts down 20, 30, 40%. That's not good for Robinhood either. Less assets under management leads less money for Robinhood.
You want to do a few ratings real quick, Triple D? You want to keep going on this tack?
Yeah, no, go ratings, sure.
Okay. All right, we do have a few. We have a couple new ratings. We have an upgrade on TripAdvisor to buy at Bank of America, but I also comments on Netflix and Reddit that I want to go over. But maybe let's start with the upgrade or the new rating.
On TripAdvisor.
You want to do Trip?
It's been a problem, man. This stock's in a huge downtrend here. Let's not overcomplicate it here. The stock is in the gutter. It's been in the gutter for a long time. So TripAdvisor is one of worst of breeds. Like, you think about all these companies like Bookings, Expedia. I mean, best of breed companies are getting hit here. You know, like the Booking is down substantially from the highs. Expedia, you know, is getting disrupted here as well, even though the disruption hasn't been bad yet. I think it's coming. I think Expedia is a sell. And now you're telling me to go buy the worst in breed company? No, thank you. I'll give that an F.
Oh,
I'll give it an S for sell. I would sell the pop on TripAdvisor. And can it build? Is it oversold? Sure. But there are so many better places to be than TripAdvisor in this space. And I don't think I want to be in this space at all. So you're telling me to buy the worst of breed company in a space that's ripe for disruption. No, thank you.
Let's hear what the color is. Maybe you will like the call even less after you hear the color. Reading this on Fly, thanks to the Fly, driven by accelerating activist engagement with Starboard. But wait, Starboard, Dennis, growing involvement and rising strategic optionality. The firm, Bank of America, sees, quote, a clearer catalyst path for value realization. The firm's valuation analysis suggests that Viator and the Fork together could be worth more than $2.5 billion, or roughly twice TripAdvisor's current $1.3 billion enterprise value. Did that color help your sentiment on TripAdvisor in any way?
Pass.
All right, another one that I wanted to touch on here real quick. Fubo, a new buy rating at B. Riley.
We're going into all the gutters here today.
I saved some good ones for you, Dennis.
Let's Fubo. I mean, kind of get these little retail pops. You know, the retail darling of 2020, which was awesome. I mean, this is great stock. We were long the stock back in 2020, and it was one of my big winners from 2020. It really went. You know, it was cool. You know, it was like going to, you know, come in the place to go watch sports. I love sports. It's failed. stock has failed. Company has failed. Is there a buy in here? Is there a potential for a pop, a short-term short squeeze? I mean, the stock was $20 a month ago. It's down to $9. So it's $30 2 months ago. I mean, the trend is absolutely not your friend here. Doesn't mean it can't have these little, like short squeeze pops. But overall here, trend is not your friend. I'm not buying Fubo.
And to, I think, your point, Dennis, the B. Riley color on the note was that the stock is down 80% since the January 2025 high. Therefore, it is oversold. I
It's
feel like there's
oversold. I'll
good
give them
reason
that.
it's
But
oversold.
oversold doesn't mean it's going to bounce.
All right, moving along here, we'll do one, maybe two more. Netflix. A lot of coverage here this morning from the sell side, including raised price target by Oppenheimer. They're raising their price target about $10. Citigroup saying Netflix is likely to raise 2026 guidance because of their higher prices. Also, JP Morgan, price increases factored into the 2026 outlook. Could Netflix be maybe potentially raising or giving some better than expected guidance? Well, we have at least two firms out of maybe the 40 or 50 that cover Netflix that think this might be the case here. How do you feel about that sentiment from the sell side? How do you feel about Netflix in general, Triple D?
Torn on Netflix. Valuations come down to, it's still not reasonable here. Oh.
No, it's
Like,
kind of
I do think could this get disrupted? Sure, it could. Is it imminent?
Doesn't feel that way.
Yeah, I mean, people, it's cheap entertainment. Like, I'm on Netflix every night. I think it's pretty stable. It's kind of like a staple almost at this point in time.
You made the argument that if we have, some kind of economic downturn, are people really going to be like saving the $10 to $20 per month to get rid of their
model?
staple?
I mean, cheaper.
Yeah.
It's kind of like a staple. It can definitely get disrupted for sure. Garen, I know you're in the chat saying this could get disrupted too. It could. I think I'm of the opinion that everything is going to be eventually be disrupted, which is why I'm selling on rips. This is why I continue to on stocks. I've been raising some cash here. We get these Trump truth pops, and I'm raising cash because I don't know what this means for the stock market overall. I'm not of the opinion that the stock market, this too shall pass. I think efficiency trades could bring us up later this year. I think the end of the war could give us pops here too, but I think it's going to be more selling opportunities and buying opportunities. I think just everything is going to get disrupted eventually. So I'm lukewarm to investing in anything right now. That's just where I'm at.
Fine. You can be there. I want to do one more real quick. We're going to take it back to Reddit for a sec, because in addition to some of the concerns that we were maybe talking about with a name like Reddit, JP Morgan out this morning saying Reddit third-party data shows slowing U.S. trends, the broader social media trial, and possibly early concerns on potential geopolitical headwinds to digital advertising budgets. Similar web data suggests Reddit's U.S. unique visitor growth year over year has decelerated to just 1% growth last month, or actually this month, from up 5% in February. Little concern here, in addition to what's kind of already seemingly happening in the background on a name like Reddit.
Stocks making new lows. You got to go. Making new lows here. Not going to fight this trend. Do I like Reddit? Do I think I just went on a full tangent, if you weren't listening 35 minutes ago, how I think there's going to be new social media platforms popping up all over the place from thousands of new creators. And I'm like, this is going to be a dispersion of eyeballs, people doing new things. Reddit is ripe for disruption here. Ripe for disruption. Not for me.
All right, folks, we are going to wrap it here for pre-market prep this week. Please join us over on the Stock Trader Network. Broadcast is going to go over there in just a minute. We're going to get you ready for the open, and then joining us at 10 a.m. in the Stock Trader Network. Anne-Marie Band will be joining us. Chris Brecher at 11 a.m. CC Legator at 1:30 p.m. And then Triple D and I will be back on air for the close, 3:30 p.m. till probably around 4:30 or 5 p.m. That is some of our regularly scheduled programming on STN.
Yeah, we'll be setting up the weekend trade. Is it going to be a war trade? Is it going to be a IGV trade? What's going to be happening? We saw some catalysts for next week. There's not a ton of them, but there's always some opportunities here, folks. So, we're doing short-term trading over there. As much as I complain about my long-term investing account, my short-term trading account's at all-time highs. From a trading perspective, separate trading account, my trading account is having its best month of the year.
StockTraderNetwork.com. Pre-market prep listeners can use promo code PMPSTN for a nice little discount there. Come check us out if you haven't. We have some fun over there while giving some real good info and education. That's going to be it for this week's pre-market prep, folk. Everyone have a